For most young people today, including people that are still coming to this country, the American dream is still to be able to buy and afford your own home. And this is still true even though the American dream of owning a home is not the value that it once was. The problem is, of course, is that most young people and people striving to be homeowners cannot afford to buy a house, and homes are still sitting close to record high prices. And at the same time, we have real estate transactions sitting at 30-year lows because people can't afford to buy houses today. But if nobody can afford a home, who is going to buy them? You know, it used to be that if you bought a house and you got the 30-year mortgage and you paid off the house, then you would be much further ahead than your counterpart who rented that entire time and never bought the house, because they even look at net worth studies today and show like, wow, look, you know, the average homeowner's net worth is hundreds of thousands of dollars while the average renter's net worth is peanuts, right? That rule of thumb has been true for a very long time, but with the state of the housing market today, that dynamic may no longer be true in 30 years from now. Because the thing is, with how expensive it is to be a homeowner today, and if that continues to be perpetuated into the future, it may actually end up costing you more to be a homeowner in the long run than being a renter. Because not only do you have the extremely high cost of the house up front, but you also have the extremely high cost of the ongoing maintenance. The truth is that right now, housing affordability is at the lowest level we've seen in a very long time. And when you adjust home prices for inflation, the home prices are basically more unaffordable than they've ever been in history. If we take a look at this chart here of the Case-Shiller National Home Price and the Case-Shiller National Home Price adjusted for inflation, which is the red line, we can see that between 1987 and basically 2001, home prices were essentially flat when adjusted for inflation. Then we had a big run up during the last housing crisis there. That's that big red bump in the middle. But then it came down and actually was in line with the long run average of going all the way back to 1987. But then of course home prices started rising again, and then the pandemic just kind of put that on steroids, which is what puts us all the way towards the end of the chart today, which shows us that home prices, even adjusted for inflation, are at record highs. And of course the problem is, when you look at this second chart here, you have the median household income versus the median house price, and the incomes are nowhere near keeping up with how much the home prices have risen, which has led us to this situation where home sales are at 30-year lows. Now, I do think this situation is eventually going to get better, and it already is getting better in some areas of the country. There's probably going to be some things that happen that make it worse before it gets better. And we've already seen some of these factors that have made the situation worse already play out, and we're starting to see the beginning of the reversal of some of them. So the first thing is that houses don't actually need to be affordable for you to buy one. Because people don't really save up money for a house, they save up money for the down payment, and then they buy the house with the down payment, right? And here's the reality. Most people only put about a 10 or 12% down payment when they do conventional financing. And now there's plenty of programs out there, just like there was during the last housing market bubble, that will allow you to purchase a house with 0% down, okay? Zillow Mortgage, Rocket Mortgage, as well as United Wholesale Mortgage. Those are the big three mortgage lenders in the entire country. They all have offers and programs where you can buy a house with 0% down right now in 2025. And the worst part is, the only way to qualify is if your income is low. So that's exactly the opposite kind of person of who should be buying a house, right? But besides that, we have more traditional programs that have been around forever, like FHA mortgages where you have to put down 3.5%. And of course there's VA and USDA loans that are backed by the US government where you can also put 0% down. So with that kind of leverage available to buy houses, it's not really a huge surprise that we've seen home prices jump as much as they have, because no one really needs to save up enough money to actually buy a house. Anytime something can be financed, the price can go up significantly. That's exactly what we see with cars and vehicles. You know, those have gotten exponentially more expensive, as well as college tuition. Look what happened to college tuition once you could get a student loan available And all of a sudden these colleges realize, hey, we can start jacking up the price because now people don't have to pay for this up front. It can be financed. Same sort of deal. And the problem is we saw the home prices just go up way too fast, right? You had home prices going from about $230,000 in 2020 to $330,000 in 2023. So a $100,000 increase in the span of 3 years when the average household income is still at $75,000. It just doesn't jive. You know, people can't afford it at that rate. People's incomes are not keeping up with inflation or the price of homes like we saw in the graph earlier. And it's a very tough time to get a good high-paying job. Companies are not hiring because of the economic slowdown that we're in. So unless you're already in a high-earning, stable position, it's very hard to climb your way into one or into a home in 2025. In fact, not having enough money for the down payment is one of the top reasons cited for people that say they can't afford to buy a house. And this is also one of the main ways that people who can't afford to buy a house end up buying one, is because they have some sort of rich family member or somebody that gives them the down payment to buy the house, and now all of a sudden they can get in, right? But that's just luck. And let's not forget, this whole system that we're discussing here, getting leverage and being able to finance houses, is also open to investors or really anybody that can qualify. This is not just for people that want to live in homes. And this home right here is the perfect example of egregious home price increases, okay? They bought this house back in May of 2021 for $11 million, and as if that wasn't already enough money, 3 years later at the end of 2024, they list the house for sale at almost $19 million. Not quite double what they paid for the house, but pretty close, right? Now, are they going to get $19 million? Absolutely not. But I'm sure they can probably get 13 million, maybe even 14 million, right? So they're still going to make a significant profit on this house if they sell it for a realistic price. And that's the problem we have with real estate today. You know, we are in a situation and we live in an economy where houses have been making more money than people over the past 4 years. Now, another reason that it's gotten a lot worse and may even get a little bit worse before it gets better, but this is something that we're starting to see turn around, which is a good thing, is that, you know, for a long time, we have had an inventory shortage. We haven't had enough homes listed for sale to meet the demand, which caused the prices to shoot through the moon, on top of the fact that a lot of free money was handed out, and a lot of people used that free money to buy real estate, legally and illegally. But that inventory shortage is no longer the case. It is actually being corrected as we speak. In fact, we're only about a few percentage points below pre-pandemic levels of inventory at this very moment. So by the end of this year, we may even actually be at or above where inventory was before the pandemic. So that's no longer going to be an excuse of why housing is expensive. And all these people that have been saying that there's a housing shortage for these last few years have been wrong. And the inventory charts today prove that. We never had a housing shortage. What we had was an inventory shortage. There's a very big difference between the two. It's one thing to not have enough houses available for people. That's a shortage, right? But what we really had was an inventory shortage, where there's plenty of houses to go around, just not enough of them being for sale at any given moment, or even being for sale at a reasonable price like we just saw here. Take a look at this graph from Redfin, and this shows you what I mean. Back in January of 2020, which was before the pandemic, we had almost 1.8 million homes listed on the US housing market, okay? And you can see how much it went up and went down and how bad those shortages got over the last few years by looking at the lows of the graph. But what do you notice going all the way towards the latest reading in November of 2024? We're sitting at about 1.7 million listings. So only 100,000 listings difference than it was 5 years ago. So I think it's pretty safe to say that we have recovered from this so-called inventory shortage, and we will continue to recover, because what we're seeing happening, the latest trend in the housing market right now, is that homes are being listed for sale and they're not selling. And people are continuing to leave those homes listed for sale a lot longer than previously. And as those homes don't sell, new ones hit the market for sale. And so the inventory continues to build. And a lot of people now are in a situation where they no longer just maybe want to sell. A lot of people need to sell, whether it's an investor who's losing money on a home, or It's a traditional homeowner that can't afford to keep the house any longer. You also have home builders right now that are desperate to sell their already built inventory, and they're giving away these homes with sweetheart deals, and it's still hard to sell them. So what is an incentive for home builders to build more houses if they can't even sell the ones they've already built? And that also completely debunks the myth that we have a housing shortage. We don't. For a while we had an inventory shortage, not a housing shortage. And the latest predicament that the home builders are in is proof of that. And what we can see by looking at this chart right here is an example of just how slow the housing market is. Okay, this graph goes all the way back to 2015, and it shows you how many homes were sold each year in the United States. And what do you notice? It was a pretty steady 5.5 million or so for a long time till the pandemic, and then it actually skyrocketed up from there past 6 million, closer to 6.5 million, because financing was so cheap. Interest rates were extremely low. People had access to all sorts of cash that they didn't have before. Once the high of all that came down, it came really crashing down towards the end of 2022 and has been on the decline ever since, and just has not even come close to recovering. And now we're barely at 4 million home sales a year as of the latest reading. And for the past few years, we had a lot of homeowners that didn't want to sell because a lot of them had low interest rates, and for a while it was cheaper to own a home than it was to rent. That dynamic has been flipped on its head. In fact, in every single major city, according to Zillow, it is now cheaper to be a renter than it is to be an owner. And this is not just due to the price of homes. This is also because of all the rising expenses that we have talked about countless times here on the channel. Rising insurance, rising property taxes, rising home maintenance costs, rising HOA costs. These fees are all huge factors in if people can continue to afford their homes or not. Now, something else that's happening that might make it worse before it gets better is we still have a lot of cash buyers out there that can afford to buy even in this environment. Okay, according to the National Association of Realtors, 28% of existing home sale transactions were all cash as of June of 2024, is an increase from a year earlier of 26%. So there's a combination of investors out there that have the money to pay cash, as well as people that have owned real estate for a long time and are cashing out their equity right now and downsizing and purchasing cheaper properties, along with people that are living in very expensive areas. They're saying, we don't want to deal with this rat race anymore, and they sell their house in California and they come and pay half price for a house in South Carolina or Texas, right? Which ends up driving up home prices in those areas that used to be affordable. This is why we're also continuing to see prices go up in what used to be traditionally affordable areas. Think areas like the Midwest or certain areas of the Northeast, where we're still seeing, home prices go up 7, 8, 10% year over year. And even though we've seen those home prices go up as much as they have, those places are still relatively affordable compared to areas in like Florida or in California or other expensive areas. And you have real estate hedge funds that buy up a lot of real estate, like REITs, that are funded by big investors like Blackstone and BlackRock and all these guys. And we also have to just face the reality that a lot of people own multiple properties these days, especially if those properties were purchased quite some time ago when it was a lot cheaper to buy, and because you got in at such a low price, easier to keep and maintain over the years. But even though those things have been happening, we are seeing the reversal, right? The home sales data speak for itself. When we're starting to see inventory levels creep back up to where they were pre-pandemic, what we're starting to see is the market slowly start to normalize back to where it was, which doesn't mean prices are going to come back down to where they were, because one thing people have to remember is we experienced a tremendous amount of inflation over the past 5 years, okay? And going back to our chart, with home prices adjusted for inflation, we may just fall back to the long run average. But in nominal terms, the home prices still might be quite high because of all the inflation we've experienced. So the housing market can still crash even if prices don't come down significantly because of the amount of inflation that we've experienced. So going back to the original question, if nobody can afford to buy a home, then who's going to buy them? The answer is increasingly becoming no one, because the sales data does speak for itself. Obviously, we're not seeing a situation where literally nobody's buying. We're still having 4 million home sales transact in a year's time. Inventory is piling up faster than homes are selling, which is going to work in buyers' favor eventually. It already is in some areas of the country. You know, for a while, it seemed like prices would just continue to go up forever, and on a national basis, we still might see home prices creep up a little bit in 2025 when we look at the median national home price, okay? It's not going to be the type of increases that we've seen over the past 5 years. And of course, that's great news for anybody who's looking to buy, because now that things are slowing down, if you can find a way to increase your income and home prices stay stagnant, then you can sort of play catch up, right? You can start earning more money while the home prices have finally stopped growing. And if you're even luckier to live and want to buy in a market where home prices are actively coming down and you can still find a way to increase your income, that's probably the sweet spot to be in right now as a home buyer. Now, a new survey just found out that baby boomers plan to pass on $17 trillion in equity to their children. 3/4 of baby boomer homeowners say that they're going to leave about $17 trillion in wealth, to their children. Now, here's the stats. 68% of boomer homeowners surveyed expressed confidence in having a comfortable retirement. This is actually down, though, from the numbers in 2016 and in 2021, okay? Because in 2016, 76% of people that they thought they were going to have a comfortable retirement, and in 2021, it was actually 81%. So you can see this number has dropped dramatically over the past 4 years, guys. From 2021 to 2025, you got about 15% less people thinking they're going to have a comfortable retirement, and that's due to inflation. As of 2016, 66% of baby boomers said that they plan to age in place, and that actually went up in 2021 to 69%. And the most recent number is that 68% plan to age in place. And baby boomers' plan is to protect their home equity in their retirement. To fund their retirements, boomer homeowners believe they will tap sources other than home equity, including savings, Social Security, retirement and investment accounts, and pensions. And only 9% of boomers anticipate that they will use their home equity or a reverse mortgage to fund their retirement. And half of baby boomer homeowners surveyed already own their home outright, and 53% who still have a mortgage have an interest rate below 4%. So the way they try to paint this picture, like, well, everything's fine, these baby boomers are going to have no trouble in retirement. But we're already starting to see the cracks form in that too when we take a look at the recent videos I've made about retirement. Because before you get too excited, let's look at the reality of this situation, okay? Even if you do inherit a house, 75% of inherited homes get sold. Most people don't want the house because they already have their own house, or it's not the right house for them, or they just want the money instead of the house. So a lot of these houses that do get passed down and inherited will end up on the market, which means we're going to have a very large, steady supply of new homes being listed for sale every single year for the foreseeable future as these homes continue to get passed down. And what do we know about supply and demand? The higher the supply and the lower the demand, the lower the prices go, especially if the prices are too far out of whack from reality, which is already the situation we're starting to see transpire right now without this massive influx in inventory. And look, here's some of the stats that we've talked about in some of my retirement videos, okay? The average retiree between the age of 65 and 75 has about $200,000 saved for retirement. You know, which a lot of them may find out as they live longer than they might have anticipated, that 200 grand is not going to go nearly as far as they hoped for. And so a lot of these people are going to end up living longer than they expected. They may end up needing to change their mind and end up using that home equity to live longer in retirement. You know, even though that's not part of the current plan, plans have to be changed and plans have to adapt based on the reality of the situation. So while many of them think that they won't have to tap their equity, that might not end up being the case, and then there may end up being no inheritance at all for the children that thought they were going to inherit the house that ends up needing to be the cash cow in their parents' retirement. And let's say you are one of the lucky ones that gets to inherit a house, right? You don't even have to pay for the house. It's free. House is paid for. That's best case scenario for anyone. But there's a chance that you still might not actually be able to afford that house because of how expensive it is just to keep a house today, even a paid off one. Because the reality is, it's getting more expensive by the year to continue to own and maintain a house. It's not getting cheaper. So in many cases, you'll also be paying a much higher property tax rate than your parents were. And also when the home changes hands and changes ownership, the insurance rates often reset as well, even though it's the same exact house. Add that up with the rising cost of labor and other household expenses that need to be paid for regularly, also unexpected expenses that come up. And even with a free house, then you might still not be able to afford it. And I know that this sounds really bad. I'm just speaking reality here, guys. I am not trying to embellish this or make this sound worse than it really is. This is just the reality that most people face. Think about it. If you have parents right now and you were to inherit their house, okay, and you already have your own house to pay for, you have three options. You can turn it into a rental, become a landlord, and hope that that goes well. Hope you're going to be able to earn enough money to continue paying for all the expenses with that home. And that's a guarantee way that your property taxes are going to shoot through the moon. Also, by the way, if the house is not owner occupied. So you're going to see your expenses simultaneously shoot up for that house, and also have problems with tenants that may need repairs or may not be the greatest, or maybe they won't pay the rent. Something like that could happen. Or you can sell the house and just take the money, which is what 75% of people decide to do, which will cause a lot of extra inventory on the market all around the same time frame. Or you can choose to keep the house and live in the house. You know, that's really your other option. But a lot of people can barely afford their own residence, and depending on the type of house or the location or whatever, it may end up actually costing more than where you live now. So in a tight economy like this, not many people are going to volunteer to live in a more expensive house than they already live in now and get stretched even further beyond their means. But I know how bad all of this sounds, right? So what is the good news and what's the light at the end of the tunnel? Well, the light at the end of the tunnel is something that I've already revealed throughout this video. New listings are increasing. They're not decreasing, which is a very positive thing for the future of the housing market. Many markets are seeing year-over-year price declines now. And of the ones that aren't, many of them are just staying steady at best. Only a handful of selected markets are seeing prices go up in any meaningful way now. That's a huge plus for would-be potential home buyers in the future. Also, with so many baby boomers planning on passing down their wealth to their children, that's also going to be a leg up for a lot of people in that position who are fortunate enough to get that inheritance. Because the best case scenario is you just sell the house, guys. You don't have to keep it. Even if the house is not worth as much because there's a big inventory glut on the housing market and prices come down, that's still extra money you didn't have in your pocket before. It's not like you had to come up with the money to buy that house. You get inherited a house completely for free. You turn around and you sell it, and now you just earned an extra $300,000, $500,000 for doing nothing. So that's positive news for a lot of people who will get that inheritance, right? And it's also going to be a good news for a lot of people who are able to pick up those houses and buy them for cheaper than you can today, at least adjusted for inflation, because of the excess inventory that we're likely to have. The good news is that the future bodes well for the future of the housing market becoming more affordable than it is now. That's the light at the end of the tunnel. So people who just think that this is all gloom and doom need to understand that as bad as everything sounds right now, the way things are changing is going in the direction to return affordability back to the long-term norms. And that's a good thing for everyone. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.